So we talk about the powers and duties of auditors. And some of the duties are that he must acquaint himself or herself with the Articles and the Companies Act. The Articles and the Companies Act guide the relationship between the members of the public, members of the company, and the company itself. The memorandum is the core document, is what the business is all about. So for an auditor to be able to do his work properly or her work properly, they must be able to know what are the provisions for the relationship between the company and its members. And in these provisions, what does the Companies Act say? Are these provisions in accordance with the Companies Act? Are they not in accordance? And can they be upheld? The auditors report to members. The main duty of an auditor is to make a report to the members of the company on the accounts examined by him and on the balance sheet and profit and loss account of the company, and on every document that is annexed to the balance sheet or profit and loss. He forms an opinion based on these balance sheet and profit and loss. When he forms that opinion, he will report to the members of the company that in as far as this information has been provided, this is what my examination of your documents has produced. So in London and General Bank, Lindley LJ observed that a person whose duty is to convey information to others does not discharge that duty by simply giving them so much information as is calculated to induce them, or some of them, to as an auditor who gives shareholders means of information instead of information in respect of a company's financial position, does so at his peril and runs the very risk of being judicially held to have failed to discharge his duty. So we are saying the auditor will not just present the books of accounts. You just don't give out information. You don't give them the means of information. Instead, you give your opinion. They can access the information. They can access the balance sheets. They can access the profit and loss accounts. But you as an auditor, you're supposed to examine them alongside any other annexure, because your signature is to be on every document that you examine, and come to the members and tell them, upon examination, upon being provided with these documents, my opinion is that your books either represent a fair value or they do not represent a fair value of the books of accounts. And in doing this, the duties have been set out in City Equitable Fair Insurance Company. And these are that the measure of an auditor's responsibility depends upon the terms of his engagement, either by a special contract or as contained in the articles. When you're called upon and told to do a general audit, that is exactly what you're supposed to do. When you're called upon and told to do a special audit, you'll be given the scope that we need you to examine the books of account for this quarter only. And why for this quarter only? We believe that the board of directors entered into contracts that were not for the benefit of the company, but we have not been able to identify which contracts these are. You've been given a special audit, so your duties and your responsibilities will be according to what you have been set out to do. We talk about the duty imposed on the auditor, and it depends on the information and explanations furnished to him. You are not an officer of that company. Therefore, you're not able to know every detail, where they keep, let's say, logbooks. If you have been given a duty, a job to examine the ownership of a company's vehicles. You cannot ascertain that unless you're given the copies of the logbooks so that you can match that information with what is available on the NTSA website in Kenya now. So you can only examine what you have been given. If no proof of ownership of the vehicles has been produced, you can't make an opinion on whether the vehicles belong to the company, whether the vehicles belong to directors, or who the vehicles belong to. And this is what we are saying, that the information that you're given is what will enable you to form an opinion. An auditor should not be content with the certificate that the securities of the company are with a particular person or firm, unless such a person or firm is trustworthy and is the one in which, in the ordinary course of business, keeps securities for his customers. So the auditor must also see that they exist by making a personal inspection of them. If there's safe custody of a banker in the ordinary course of business, he may rely upon the certificate of the banker. And this is what we are saying. If the company has said they have used the title deed of their building space to acquire a loan, then unless, and when the auditor asks who has the title deed, ideally in that course of business, the banker would be the custodian of that title deed. If anyone else, if a director purports to be the one holding that title deed, then you cannot believe that the director is doing it out of goodwill. What business would we be having holding the title deed that is not kept at the registered office? You may rely upon the bank because they have an interest. They need to make sure that the loan advanced to you will be paid. So they will place a charge on your title deed. And this is what we're saying, that as much as auditors rely on the information, they can't be content with just being told, yes, we have logbooks. The auditor needs to ensure that these logbooks are legitimate, that these logbooks, whatever information is endorsed on those logbooks, matches the information with the Register of Motor Vehicles. So they cannot just accept information given to them. They must also go and ensure that this information is correct. And further duties include the statutory reports, that after the statutory report has been certified correct, but not less than 2 directors, the auditor must also certify the report is correct in as far as it relates to the shares allotted by the company, the cash received in respect of shares, and the receipts and payments of the company. And this provision does not apply to private companies, as they are not required to hold a statutory meeting. In part of the meetings that are held, that once every year, and the number of shares that were issued, the number of shares that have been paid up in full, they will be discussed, and that document signed. The auditor will also append his signature on the same to certify that that information is correct. And in case of a prospectus, the law requires a report by the auditor with respect to profits and losses, assets and liabilities, and any paid to be included in a prospectus. The auditor has to certify these as correct. We issue a prospectus when we want to invite the public to trade in our company. And the information in the prospectus is what will be relied upon. So this information needs to be correct. When a member of public, when an individual, when an organization reads the prospectus and sees that the profit and loss account has been attached, that the company for the last 5 years has been making profits, and is enticed by these figures to to buy the shares. If this information is found to not be correct, anyone who has endorsed on these prospectus, knowingly that it is a fallacy, will be held liable. And this is where you as the auditor, you are expected to remain independent. If the information is not correct, do not certify it as correct. Because once the prospectus is issued, once it becomes a public document, once someone relies on that public document to make a decision, you cannot again go back and refuse liability. You will be liable to the extent that the person suffered that loss. Same as the directors who endorse on that prospectus. Anyone who relies on that information and proceeds to make a decision, then you who made that false statement, you'll be held personally liable. So you as the auditor, whatever you sign, whatever you append your signature on, you must certify it to be correct. So auditors also assist in the investigation of the company. And Section 165, where we rely on that definition of an auditor as an agent, not in its strictest term, but according to Section 5, to preserve and to produce to an inspector any person authorized by him all on his behalf, the previous approval, all books and papers which are in their custody, and to give the inspector assistance in inspecting all the books and papers of the account. So in this aspect, you as the person or as the company tasked with ensuring that whatever is represented protects a true and fair view of the books of the account, you will be required upon to assist with the investigation of any company that you are working with. So we talk about the duty of care and skill, that you as the auditor, your qualifications are not put to test. Your independence is not put to test. Your integrity is not put to test, because your job is to ascertain that the books show the true financial position. And you must more than merely verify the numerical accuracy. You also go into the entries or omissions that may have been used to cover up. You go into the finer details. And you check the cash and bank balances. So we talk about the powers of auditors. And this is where the auditors have a right to access the books and accounts and vouchers of the company. And they may require from the officers such information and explanation that they think necessary for the performance of their duties. So where the directors do not provide this information, you as the auditor must indicate that you are not furnished with enough information to make a conclusive report as to the true and fairness of the books of accounts. And you remember, auditors are appointed at general meetings. So it is their business to ensure they attend the general meetings. And in attending the general meetings, they must be sent all notices. And where an issue has arisen that focuses on them as auditors, they must be able to speak up and provide the correct information.